Hey everyone, and hope you had a great week of trading. An interesting week here with some strong candles going up and down, but overall we did see some selling here throughout the week. I'm going to kind of be doing an overview of all the indices and then some of the sectors that we should be keeping our eyes on and things to be looking at with them. So starting off here with the ES, we can see we did get a close below this 21 EMA, held the 50 moving average, which is a good sign because it did here in previous times. We also do have this daily squeeze with bullish momentum holding here, which is a good sign to see that this could start to roll back up here as long as we're keeping this bullish momentum. So everything about the ES on the daily time frame is still relatively bullish, just would ideally like a close above the 21, but everything about its structure still looks good with our stacked EMAs and a nice squeeze showing us bullish momentum. Now, if we go on to the higher time frames, we can get a better look of what's going on. So if we look here on the weekly time frame, we can see we had this reversion down to the mean, came up, reversion down to the mean, and bounced right up again to this +2 ATR, and then we're rejecting that, falling back down to this 8 EMA. We do have a low compression squeeze with the histogram above the 0, so that is still good to see. So everything about this weekly is still very bullish in my opinion as well. Now if we move on to the monthly, this is where things get a little interesting in my opinion. So if we look here, we can see that since COVID, we've had this monthly squeeze firing, giving us this huge bull run. And now we're finally getting two darker blue bars, which means that bullish momentum is starting to decline. We're also at pretty extended levels on this monthly chart, almost getting to that +3 ATR. And I think that we could potentially see a larger pullback here in the next few months back to at least the 8 EMA, and there's always that potential that you get the reversion back to the 21 EMA. So with this monthly squeeze ending, we definitely either could see consolidation or quick falls to these levels of support. So definitely keep your eye on the monthly chart and this momentum to see if it keeps declining here in the new year. All right, now if we go back to a daily time frame, we can move on to the Qs. Qs are looking a little less ideal here. We do not have stacked EMAs. We're in a deceleration stage, and we're closing below our previous support on that 50 moving average, with a daily squeeze having bearish momentum looking to fire to that downside. So the Qs, in my opinion, definitely are not bullish anymore and are definitely much more bearish. We couldn't break out here of that +1 ATR at these levels, consolidated near the 21, and now it looks like we're going to keep falling to that downside, potentially breaking this previous low, making lower lows here on the Q. So definitely keep your eye out for this level right here at 15,540 to see if it breaks that level. Now we move on to the weekly time frame. The weekly time frame is still very much intact. We have our stacked EMAs. We're in an acceleration stage, well above the 21 EMA. It didn't even come down and touch it yet. So everything about the weekly time frame still looks very good in my opinion. But definitely keep your eye on that along with that daily chart to see if you do get more selling below those previous lows. Now moving on to the monthly chart on the Qs as well. Basically the same story as the ES. So you get the COVID, you get this monthly squeeze that's firing to the upside. Basically, the Qs have been the closest thing they revert back to is this 8 EMA on the monthly, and then they just keep skyrocketing back up to +3 ATR, reverting back to the 8 EMA and skyrocketing. But that was all with good momentum here on the squeeze histogram, and now we finally have, just like the ES, two darker blue bars showing us that bullish momentum is starting to decrease, and at least I would like to see it come back down to this 8 EMA, which could potentially be, as it was before, a place of support where it could bounce, or we also could see the fall back down to the 21 EMA, making a full reversion. So just like the ES, keep your eye on that monthly chart into the new year to see if we keep declining on this momentum. Alright, next one here is the Dow. Dow had a pretty sloppy day here today with aggressively red with a very strong candle pushing it below the 21 EMA and that 50 moving average. The squeeze histogram is still bullish. We do have a low compression squeeze on it with bullish momentum in it, but today was an aggressive selling and we did not break out of this +1 ATR. So I think that with this squeeze may roll over and we could go retest these previous lows. Now, if we go on to a weekly time frame does not look bad at all. We have this weekly squeeze histogram above 0, which is good to see. We have our stacked EMAs and in an acceleration stage, and we're holding above that 21 EMA. Actually held perfectly at that 8 EMA to end the week. Would ideally like to see this squeeze start to gain some more of these lighter blue bars and potentially have the Dow push to that upside in the next few months. Doesn't mean it has to happen, but its weekly chart does still look very good in my opinion. Just always follow it up by looking at that daily chart too to see if you can maybe get a reverse on that. So now if we come to the monthly time frame, basically the exact same story as I have with the other indices. You have the monthly squeeze fire. It's now starting to lose momentum. And this one never really pushed up like the Qs or the ES did to that like +3 ATR region, but it did push up respectively to that +2, which is also an overextended level. Has been holding this 8 EMA as of now in the monthly, but as I said before, with these darker blue bars, it means we are losing some bullish momentum, and I think this one will be much more likely, as it's already sitting at that 8 EMA, to revert all the way down to this 21 EMA. Not saying it has to happen now, but just keep an eye on that within 2022 we could get a reversion to the monthly mean, and that's kind of something I'm keeping my eye on going into the new year. Alright, last but not least here we have the Russell, and the Russell looks the most bearish compared to all the other indices. If we do look at this previous range bound it was in, let me draw some lines here. There it is. So if we take this low, and it comes up at that low, and then if we take this low, so this, oops. Alright, there's kind of a little range of potential support on the Russell. We can see that we almost came down, touched it, reverted back up to the mean, and then fell straight down back into that level, but actually have been holding that level and bouncing off of these supports, which is a good sign to me that hopefully it'll at least stay range bound and not crash below these levels. I would hope that it would try to at least come back and touch the higher resistance line of the range here, but does not mean it has to. Could break right through it. Ideally, that is what it would do though, is hold that support and go back up into a resistance. Definitely keep my eye on the small caps as they do look the most bearish as of now, but if we could get that reversal up to the upper range, could be nice for some plays. Now looking at a weekly, here, let me take out these lines. Alright, it's weekly time frame, and this is another reason why I'm quite bearish on it, is that this weekly squeeze has gained a bearish momentum. We are rejecting the 21, not even able to touch the 21, trading below the 50 moving average. Everything about this is basically bearish. Nothing about its structure is looking bullish. The only thing that's looking bullish to me is that it is holding these previous levels of support, and if it can continue to do that, this squeeze could revert to the upside here. Just depends on if we start getting some closes above that 21 EMA, which would be ideal. Now coming to the monthly time frame here, just like the other ones, you had that squeeze, make that large push to the upside, got to extended levels, had been consolidating around this 8 EMA, and now this one I think could, if we do start to get a monthly reversion, as we do have these darker blue bars. It's already closing below the 8 EMA on the monthly. The next thing to look at is obviously going to be the 21 EMA, so this is, if we do start to see some more selling throughout the market in the next year, is a place that I would like to see hold as support on the small caps. Now, going over the sectors within, because some are showing strength and some are looking very bad. So the first one here being materials, which is actually looking very good. We have our stacked DMAs. We're closing above the 21 EMA and a low compression squeeze that is looking to fire to the upside. So this one compared to the rest, not all of them, but majority of them is looking bullish. If we come here to the communication, this one is looking extremely bearish. Have a great downtrend here, consolidated, broke out of this daily squeeze, getting this large flush. And now to me, if we keep holding below this 21 or consolidate here again, we will form another squeeze and we could see the next leg to the downside. Energy is setting up to also move to the downside here. We have no stacked DMAs, starting to trend more to the downside, kind of more sideways here with these Keltner channels showing us. But we do have bearish momentum on the squeeze, getting closes below the 21 EMA. So I think we could easily get a push back down to these previous lows and then probably break those and see some more selling on energy. Financials also looking bearish. Daily squeeze with bearish momentum on this big red candle here. Couldn't close above the 21 to end the week. Could easily retest these previous lows if this squeeze does continue to fire to that downside. XLI rejecting this 21 here. No squeeze on it at all, but you can still just play with its price action, showing that it's rejecting the 21. Could easily retest previous lows as well. Technology is getting hit a little harder. We do still have stacked EMAs, but we're getting closes below that 21 EMA with momentum starting to decrease. Could potentially see red bars here in next week, giving this a push to the downside. XLP is extremely bullish here. Did not have a squeeze to propel it, but basically went straight vertical to plus 3 ATR, which is overextended, and then it fell back down here today off of those levels. Couldn't even reach all the way down to the 8 EMA, so look for a fall to hopefully that level, and an even better level in my opinion would be the 21 EMA, which then hopefully a squeeze would have formed and we could take some entries on XLP. Alright, real estate also looking very bullish here. Had a great daily squeeze fire to that upside. Been pinging between plus 2 ATR and the 8 EMA, going back and forth, just bringing itself right up. So the real estate sector is also very bullish in my opinion. Along with utilities here, they also, just like the real estate, had a nice daily squeeze fire to that upside, got to these pretty extended levels and has reverted back down to the 8 EMA. Could see a continuation or a reversion back down to this 21 before any continuation. Alrighty, XLV. Healthcare is also doing very well, just like utilities and real estate. Had a great daily squeeze fire to the upside, bringing it to those extended levels, and now we're looking for reversion. And then last but not least, here is XLY, which is looking bearish as this squeeze is firing to the downside, rejecting this 21 EMA here multiple times. Could easily see more continuation here with XLY to that downside. So that is my overview of the stock market and where it sits at right now. Hopefully it gives you all a better understanding of levels and other things you should be looking at coming into the next weeks and also into next year as a whole. So I hope you all have a great weekend, everyone.